Welcome to Exchange Rates UK TV. It is the 2nd of November 2021. Taking a look at NEXO here on the weekly chart. We've got a couple of levels that we're kind of focusing on here. First, I really want to point out that the move here on the weekly chart is extremely bullish. There's really one condition that needs to be met before it kind of goes into full-blown bull mode. And that is, if you think about what are the rules for an ideal Ichimoku breakout, an ideal bullish Ichimoku breakout, the rules are that the future span A needs to be above B, which it is. The close needs to be above the cloud. It is. The close needs to be above the Tenkan-sen, the Kijun-sen. It is. And then the lagging span needs to be above the candlesticks. It's not. So for the current week, in order to get to a condition where the Chiku span or lagging span is above the candlesticks, we need a weekly close at or above 393 basically. And that's really pushing up towards those prior all-time highs. By next week, that threshold drops. So instead of needing a close at 393, by next week, we would need a close at 343. And then the week after that, it drops considerably again. We need to close at 232. And it's not just closing above the candlesticks that needs to occur. It's closing above the candles and being in open space, meaning it won't intercept the body of any candlestick over the next 5 to 10 periods. On the daily chart, NEXO's just had a pretty good run here. It had on Sunday, Monday it had a 4.65% gain, and then we just opened up on the new Wednesday candle, but the Tuesday candle closed up 10.93% for the day. That's very, very, very good. The RSI is trading at 70, which is not overbought. In a bull market, the overbought levels are 80 and 90. You've got the percent B still above 0.8, and you have the composite index looking like it's going to cross up higher. So, there's a lot of things pointing to NEXO continuing on, but there's also some warning signs that, some topping pressure might come in here, some selling pressure. Especially when you look at the weekly chart, you see this kind of activity where you look at the current candles and you see you've got lower highs currently, but when you look at the peaks in the composite index, you've got these higher highs developing. Now, that's hidden bearish divergence, and there's a harmonic pattern in here as well that is kind of sending some warning signs about how much higher it can go. But there's just a little. Is it bearish? Are we in a bear market? Not. You could say we are. Still, because we're off of these highs, we've had these swing lows, we're trading higher. If we can't produce a new all-time high, or ideally a new all-time high close, then that bearish divergence that exists might play out. You might see NEXO have another move south. But for right now, if momentum exists and it exists here, it is strong and it continues to be strong market-wide, then, it'll just kind of keep rallying, and that's something we should watch out for. Thank you for watching. From all the Exchange Rates UK TV, please don't forget to like, comment, and subscribe.